Your forecast had been for a contraction in terms of producer prices of 1.9%. The actual number, as we were saying, is minus 2.1%. What does it tell us?
Thanks, Tom. Yeah, as you have mentioned, that the PPI numbers have actually been unchanged compared to September at negative 2.1%. So I think that reflected that the recovery phase in China is probably entering sort of a stabilization trend after the initial surge. So we are probably going to see a much less or much more moderate pace of sequential recovery as China enters a new phase of growth. So CPI has also been eased much more than expected at 0.5%. So I think that's mostly on the back of easing pork prices cycle. And it's perhaps mainly still driven by food prices. As the core CPI, we expect them to be relatively more stable and subdued.
Does it change the calculus, do you think, for the PBOC and Yigang?
Well, I think if we look at headline average CPI, it still remains well below the government targets of 3.5%. So I think inflation at this moment should be one of the least concerns for the PBOC in terms of easing. And the PBOC might well remain neutral with a targeted easing at this phase of recovery.
Yeah, Peiqian Liu, in fact, it might also be the opposite. I'm not sure if you saw our story, and they talked about this on Friday. I think it was the vice governor at the PBOC talking about how China might be considering looking at options of exiting stimulus. I guess the question there is, well, what's your first reaction? And in terms of timing and how they do it, what are your thoughts on those?
Well, I think when the PBOC deputy governor was talking about exiting stimulus, my understanding of that was perhaps an exit of pandemic-related stimulus, which is the special rediscounting and relending facility that has been rolled out this year, specifically to tackle the pandemic. So as we have passed the initial phase of a pandemic crisis, we are probably looking at more targeted easing and a more pre-COVID approach of a prudent policy with more specific easing for corporate investments as well as consumers. So overall, I think the PBOC is still going to remain on a neutral path, and it's nowhere close to tightening bias.
Yeah, that's a very important distinction to make, and thank you for making that distinction there. Let's look then at the other side to this recovery. What do you think is the weakest link to this recovery in the Chinese economy, Peiqian?
I think there are three particular factors that I think might remain as the risks. COVID is definitely top of the radar because uncertainty still remains. Even though it's a positive vaccine news, we're not sure about the rollout rate and the timeline of the adoption of the vaccine. So that remains one of the major uncertainty for China's recovery. And secondly, we also think that the U.S.-China relationship remains unclear. Even with a new President-elect Biden in office, we're still not sure about how U.S. is going to approach on U.S.-China trade, technology, and geopolitical relations. So those remains risks to China's growth forecast. And lastly, I think that as China's growth remains in a positive territory, market might begin to worry that whether or not the PBOC is going to bring back tougher financial regulations, just like what happened in 2018, a deleveraging campaign. So markets' concern over the balance between financial regulation and economic growth support might well be back in markets' concern again.